I'm with Libby Bernick, the head of sustainability at Morningstar. Libby, it is wonderful to see you today. Thanks for coming on at this time when all the talk is of ESG being at a tipping point, a pivotal moment for ESG. What's your take on that?
Well, we are at a tipping point. When we look at the number of funds, managed investments that are incorporating ESG, environmental, social, and governance factors, we saw a dramatic uptick in 2019. There used to be 50 funds, for example, in 2018. And then in 2019, that jumped to 500 funds that are incorporating ESG factors in their strategies. We also see this enormous rise in the flow of money to sustainable funds. So up fourfold in 2019, now over 10 billion in the US just in Q1, and 45 billion euros in Q1 flows. The other way that we look at this tipping point is how asset managers are incorporating ESG factors in their strategies and processes. It used to be a siloed thing, and now we're seeing asset managers really taking a bottom-up approach to integrate these ESG factors. So those are just some of the ways that Morningstar is looking at this tipping point that we're seeing towards sustainable flows.
We're in the midst of a short-term crisis, hopefully. How do you square that with the, sort of this move towards long-term investing and the thinking around that?
Well, the market can only see the short term because we haven't made the long term visible. We haven't made these environmental, social, and governance factors fully transparent, fully at scale for all of the market to look at. And we've also been thinking quite narrowly about the market participants. So a lot of the short-termism conversation has been directed towards companies, but we've got to start including all market participants in that conversation. Companies, but also asset managers, helping them understand that it is their fiduciary duty to look at these ESG risks, but also look at stewardship and being good stewards of capital. And then the asset owners, helping institutional and retail investors understand how important these environmental and social issues really are. So making the long-term visible for companies, for asset managers, and asset owners is what's really important here.
So given everything that's going on, what's the overriding message to clients?
Well, as we look at it, Morningstar, our mission is to empower investor success. And we think it's really important for people to be investors, whether they're saving for retirement or trying to meet personal goals, or even being prepared for emergencies, like how important this has shown us in this market downturn. And at the same time, people are really interested in sustainable investing. Morningstar research shows that about 72% of all people track and are interested in sustainable investing. And this crosses all genders and all generations. But at the same time, there's a lot of people who don't have any savings. In the UK, 15% of people don't have savings. In the US, about 25% of adults don't have any savings. And when you look at millennials, that jumps up to 42% of millennials don't have any savings. Therefore, we see sustainable investing as a real opportunity for advisors to engage with investors and get them interested in investing and create this next generation of long-term investors who are better prepared for emergencies, such as the one that we have in place now because of the virus, also for long-term retirement and savings.
What does the industry look like going forward, assuming we get through this temporary crisis?
Well, I hope we see a couple things change within the industry. The first is that we saw that we can transition to a business where people can work from home with a little bit more flexibility. And I hope that that leads to a more diverse workforce and a more engaged workforce where people have options And of course, women are more able to be fully engaged as workers. I think that this virus has also put a spotlight on social issues. There was always a notion that these social issues were a little bit fuzzy and hard to measure. And it's really brought these social issues into focus. So going from fuzzy to focus on things like employee benefits, worker health and safety requirements, executive pay. So I think coming out of this crisis, I hope to see that we have a more honest accounting of business performance that includes financial costs, environmental costs, and social costs, things like employee benefits, health and safety, healthcare, carbon emissions, and the like. Because who's going to pay for the cost if no one is willing to pay for the price that's being paid now?
Libby, I really appreciate it. Thanks so much.
Thank you. Pleasure to be here.
Thank you.